All right, markets world over are holding their breath for Israel's response to the barging of Iranian missiles on its soil. The wounds of Russia-Ukraine war, though still it's ongoing, right, they're just beginning to heal. Could we see tensions in the Middle East degenerate into an even wider war? And how will it impact developing and emerging economies? That's the conversation we hope to have. Optimism around central banks' policy easings across the globe could be replaced with geopolitical fears. Meanwhile, markets in Nigeria open for the quarter and the month today. What are the sentiments driving it? Are the bulls coming in from September into October? All this and much more on the show today. Welcome. This is Market Pulse on News Central in partnership with Nairametrics. I am Joanna, Mustapha.
And I'm Frank, Fagbo.
All right, let's begin with top stories from the global markets. Frank?
So the stocks posted small moves. If you look at what has been happening with the stocks market, the moves not so much, but we're seeing a steady yield as regards bonds. With markets, most of them, all of this is literally against the backdrop of what is happening in the Middle East. You're seeing the price of oil also increasing, and gold getting closer to its record-breaking $2,700 mark. Who knows? Perhaps if this the end of this quarter, we're going to see gold hovering around the $2,700 mark. It's really a great time for a lot of alternative asset classes. Europe stocks 600 index edged 0.2% higher, and this was led by shares of energy firms and defense stocks. We're seeing a lot happening as regards the futures also. Futures on S&P 500 literally fluctuated, while the treasury yields ticked up with a 10-year around 3.74%. The dollar traded flat across all markets. In all of this, the most stocks held firm today, while oil prices and some safe haven assets rose, suggesting that the market and perhaps all other asset classes around are literally doing amazingly well. And we're seeing that the impact of escalating Middle East tensions is also having an impact on the market, and this has been contained for now. But let's see what the market holds regarding all of what is happening in the Middle East. The safe haven dollar traded close to its strongest in 3 weeks versus the euro.
Right, and we're also seeing these escalating hostilities also, grip the attention of traders and investors in Asia today. Worries are lingering over the possibilities of a wider war, but some markets seem willing to look past the risk, particularly in Hong Kong, where the benchmark Hang Seng stock index surged more than 4% as the market's sugar rush from the China stimulus announcement showed little signs of fading. And who knows, the euphoria might have gained even more momentum if mainland Chinese markets hadn't shut for the Golden Week holiday. So, we'll see what happens, ahead, and whether or not tensions escalate and whether the whole thing boils over into a wider war. But we're taking a break right now. When we return, we'll take a look at how the Nigerian Stock Exchange kicked off the month of October. All right, you're still tuned in to Market Pulse. Now we're heading to the Nigerian Stock Exchange, the first trading day in October. Markets closed, in the red. Banking stocks were a major drag on the markets today. The banking index heading negative for the day. Investors are definitely picking profits on some of the big banking names. It's one of those days where you really don't want to take a look at your portfolio because it's red, right? Markets saw sell interest of investors in some of mid and high capitalized stocks, Access Core, FBN Holding, Fidelity, FCMB, UBA, GZCO, Ando. The list goes on and on and on. MTN as well is also on that list. They all closed in the red. So it's not exactly the start many anticipated, but losers today, gainers tomorrow, they say, and obviously vice versa. Altogether, we had 26 gainers and 32 losing stocks on the floor today. So, we'll see where the scale, we can see where the scale tipped here, right? Market is down 326.40 points. We can have the charts up, down 0.33%. 0.8% today. We're seeing the all share index now at 98,232.39. That 100,000 point psychological ceiling is quite, still far ahead. We'll see what happens, whether or not we get there this month. Market capitalization, 56.45 trillion naira is where we are at. Coming to the top gainers, we're seeing international bureaus top the list of top gainers, 9.98%. Maya as well, 9.94%. Veritas Capital, 9.93%. Triple EG is also up at 9.91%, and Deep Capital, 9.84%. Coming now to the top losers list, we're seeing a lot of the big names that made top gainers last week and last month. Now investors are evidently taking profits. Ella Lakes, Caverton, ABC Transport, and the likes down on the losers list today, losing quite significantly. So that's what happened. Top traded stocks, it looks like a lot of the banking stocks are up there. UBA, with their results and obviously their dividend payouts as well, topping that list in volume and value. Zenith Bank as well, Veritas Capital, Ella Lakes, all making it as the top traded stocks, volume and value. Up next, we'll be picking up the pulse of the day with Matilda. She's with Meristem Capital. We'll get into that in just Meristem Securities Limited. I beg your pardon, a research analyst there, so stay with us for that. Focus continues on the key driver of markets today, the rising tension in the Middle East. Oil prices surged by more than $1 in early trading today amid growing concerns that escalating tensions in the Middle East could disrupt crude production. And of course, this is all following Iran's most significant military strike against Israel. Yesterday, oil prices rose by about 3% following Iran's launch of ballistic missiles at Israel in response to Israel's military operation against Hezbollah, Tehran's ally in Lebanon. Brent futures increased by $1.86 or 2.6%, closing at $73.56 per barrel, while U.S. West Texas intermediate crude climbed $1.66 or 2.4% to settle at $69.83. Earlier in the day, both benchmarks have spiked over 5%. That's quite a lot going on, in that sector. And of course, it's going to boil over into the markets.
Joining us is Matilda Adefalujo, who's an investment research analyst, Meristem Securities Limited. She's joining us today on the Pulse of the Day. You're very much welcome, Matilda Adefalujo.
Thank you for having me.
So if you look at what has been happening, knowing fully well that NNPC, the oil and gas sector in Nigeria has been fully deregulated, and we're seeing that we're transitioning into a cost-reflective petrol market era. What impact do you see this whole escalation happening in the Middle East? What impact do you think this would have in the stocks market, especially emerging markets like that of Nigeria and different sectors? What impact do you think this would have?
Okay, so let's even try to have a better overview of what is currently going on. So there's been a form of retaliation from Iran, there's been some missiles being thrown into Israel, some say closer to about 200, right? And then these strikes were basically carried out, like I said, in retaliation for the attacks that we saw on Gaza and Lebanon, right? And also, Iran has also warned that they'll be launching again if Israel retaliates or if there is any form of retaliation from Israel. And it's also important to know that this is a war that is already brewing, and the US has expressed full, I'm going to mention 3 supports for Israel if, we see any much more escalation. Now, looking at the fact that Iran has direct involvement in the conflict, and it's also an OPEC member. So this, basically raises concerns for oil production, oil supply. There's an expectation of disruption in oil supply, right? Now, when you look at it, when you try to break it down, yes, Nigeria is an exporter of oil, but we do not determine the prices. So factors like, geopolitical tension, such as what is currently going on, is expected to negatively impact, well, it depends on who is looking at it, to impact oil prices. Now, as the oil sector here in Nigeria now then become deregulated, it's expected that the general oil prices in the global scene is now expected to reflect fully. And when you look at oil prices, petrol prices now, you're looking at different factors. There is the exchange rates in Nigeria, then there is also the global oil prices. Now, if these two factors move against us, then it's negative. There's been uproars, there have been cries and concerns about, cost of living, some businesses having it difficult because of higher inputs into their cost of production. Now, when you look at a company like Danksem, right, for their 2023 full year, fuel and power contributed about 40% of costs, and by H1 2024, this has already risen to about 45% of their costs. So when we continue to see, these escalations, and then of course concerns about different costs of inputs into production now further escalating, there's now going to be concerns of what's going on with cost of production. We expect that companies in the industrial goods sector, companies even in the consumer goods, the FMCGs as we call them, they would now continue, they will now, they will have higher cost of production, which could further, bite down into their bottom line, and it's not so positive.
Is there a safe haven for these stocks, right, and these companies, Dangote Cement and other industrial stocks? Is there a way they can hedge against the effects of oil prices? We're hearing things about CNG and so on and so forth. Is that something that they can take up to hedge against the effect of fluctuating oil prices?
Well, was it last month there was a reform that came up about CNGs, but then I think another way to also look at it is the likely rebates that we might be getting from the Dangote refinery as it fully comes on board, and then there is also the whole naira for naira import deal arrangement with Dangote refinery. I believe that on one hand we might have, since it is the exchange rate and the global oil prices, is still a thing. But the fact that Dangote refinery will be selling in naira to NNPC and then to other marketers and off-takers, I believe that this should provide some sort of respite, for these companies.
All right. We'll see what happens in that regard, right? It's still something that's ongoing and playing out. But looking, globally, right, we've seen traders, across the globe, they're waiting for Israel's response, right, and how that will affect oil prices. But we're also seeing, there was that optimism initially, right, that perhaps we could see a lot of easing from central banks of rates across the world. But is that now being replaced by, geopolitical fears and concern? And do you see that affecting inflation and hence the global economy perhaps stepping back with its gear towards easing interest rates?
Well, that's an interesting question, because if you, it's not even that people did not expect this. This has always been on the table, right? When we write most of our reports, even the Monetary Policy Committee, when they, come up with their declarations and all of that, it has always been on the table. There's a likelihood, or there's a chance that we could see, a further escalation of different geopolitical wars, and all of those things have been going on. But so for a lot of monetary authorities, I believe that this has already been priced in. The extent now, it's now something that is to be determined. But I expect that with what is currently going on, I've already spoken to global oil prices. There's also the tendency or the chance that there are some shipping companies that have already even started resuming their operations would now have to halt their passage through threat-prone areas. And what this does, of course, is to reduce supply. And when supply is disrupted in any way, it would further push up prices. And, we know that the core inflation, still tracks imported inflation, and this is still high. So this is something that I believe would you know, would make monetary authorities to further, you know, look at and watch carefully to see what's all of this, you know, cascade into. Are there things that they were actually initially anticipated? Because of course, for you to make any decision, you have considered the pros and cons, and you know, different threats, you know, materializing. So I believe that they will be careful and want to monitor the development.
Yeah, I mean, thank you very much. I mean, quite some insight there. You've said that, you know, some, you know, central banks have already priced the possibility of that into their decisions. But it's been great having you on, Matilda Adefalujo, the first lady on the show, right? We waited too long to have this happen, but it's great to have you in on the show. Investment Research Analyst with Meristem Security Limited. Thanks for joining us. So let's, after this break, we'll take a glimpse into African markets, what's happening there, and of course, key metrics with Frank. All right, you're still tuned in to Market Pulse on News Central in partnership with Nairametrics. Right now, it's Key Metrics with Frank as he unpacks an insurance giant's surprising growth.
Okay, so it's been a great time, especially in an NGX. And if you look at some sectors, some tech sectors are literally doing some numbers. And what if I told you that there's a particular share price that has given us much more yield than our current inflation rate? What is the current inflation rate? So imagine investing in a company that the yields returns higher than Nigeria's current inflation rate. That sounds too good to be true. And that's exactly what Cornerstone Insurance has achieved with a remarkable 79.29% year-to-date share price gain as at 28th of September 2024. And if you look at all this, it just tells us that numbers don't lie. So let's crunch a few of the numbers, and it gives you an informed perspective as to what is happening with this particular company. 79.29% year-to-date share price gain. That's like turning 100,000 naira into a whopping 179,290. And imagine doing that in just 9 months. So from year to date, that's the third best performing stocks in NGX insurance sector. 76% year-on-year growth in insurance revenue to 16.947 billion naira. It's quite impressive, but a lot of investors are asking the question that how sustainable is this? Heavy dependence on non-life insurance product. That's 84% of revenue coming in from non-life insurance product. Investors are also saying that weak insurance service results, that's 2.135 billion naira and 7% of their profits before tax. Investors are also talking about the fact that we also need to consider their high operational cost and potential underwriting issues, because there are a lot of issues regarding underwriting. They're also saying that the foreign exchange gains is one of the major reasons why we're seeing a lot of gains, foreign exchange exposure that they have. 93% of their net financial result came in from FX. They always say the devil is in the details, and let's take a look at some of the details. Cornerstone non-insurance segment contributes 84%. Non-life insurance segment contributes 84% of revenue, making it quite vulnerable to economic fluctuations. And what this means is, so for instance, you see most of the revenue coming in from non-life insurance, for instance, cars, houses, or some other properties. And so if you look at that, they are exposed to natural disasters. And think of it like building a house on shifting sand. And if you look at that, it tells you that anything can happen at any point in time, especially in an economy that is literally that of the Nigerian economy. It's so tough. 12% coming in from life insurance. And so that's why a lot of investors are saying that this is the time where you need to diversify and make sure you pay attention to doing your own research, doing proper due diligence before investing in some of all these asset classes, like what you're seeing in the insurance sector is doing amazing numbers.
Diversification has always been the best policy.
79% year to date. That's crazy.
That's very interesting. But again, diversify, right? Your portfolio, keep it diversified so that whatever happens, whatever sectors have invested, you're somewhat hedged against all those things. All right, so that is our show for today. We'll continue to keep an eye on all the metrics across the markets at 4 p.m. West African time every weekday. It's Market Pulse on News Central in partnership with Nairametrics.